Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Shiraz Mian here with the Zacks top stock video. Joining me this week is Brian Hayes. Brian and I both have picked stocks that play on the housing industry, which we find as interesting, given all the macro questions swirling around. So my pick is Home Depot. I've explained my long-term thesis for Home Depot in these slides that I'll share with you. So let's just jump right into it. So as you could see here, I've plotted Home Depot versus Lowe's and the broader market. That's S&P 500 in the green. This is year-to-date performance. You could see Home Depot is the clear laggard here. By the way, my thesis for Home Depot is as relevant for Lowe's. My preference is for Home Depot because they are a leader in the space, and my sense is they benefit more from what I have to say. This is the valuation representation for Home Depot. As you could see, 21.4 times forward 12 months versus 20.2 times for the S&P 500, a modest premium to the market. And we've plotted here the 5-year valuation history. And you can see that Home Depot has always been at a premium, with the premium expanding at different stages in the cycle. This is the relative valuation metric more precisely, meaning the forward 12-month Home Depot multiple versus the S&P 500. At the bottom here, I have highlighted it's currently 1.06, meaning a 6% premium. Over the last 5 years, it has traded as high as 1.32, meaning a 32% premium, as low as 0.84, meaning a 16% discount, and a median at 1.07. So the current valuation, or the premium to the market, is just a hair below the 5-year median that the stock has traded relative to the S&P 500. These are the obvious issues. The guidance recently was subpar. This is the stock performance relative to the estimate revisions history, and those of you that follow us closely know that we are strong believers in the power of earnings estimate revisions. In fact, our rating system, the Zacks rank, is driven by what happens to earnings estimate revisions. So the top two lines, the light blue and the red, represent what has happened to earnings estimates for 2023 and 2024. The red is 2024, the light blue is 2023. And as you could see, there's nothing positive in that revision trend. So, as captioned here, don't be Captain Obvious. This is news. The headwinds are well known. There's macro uncertainties. There is this widely discussed shift from the goods versus services spending. And then obviously the Fed hiking cycle, even though we may be close to the end of that, rates are expected to remain elevated. And that has negative implications for big renovation, remodeling projects. And all of that is a headwind for Home Depot. And you saw the impact of all of that in these estimate revisions trend. So why am I still recommending? The coming R&R boom, and this is not rest and recreation, it means repair and replacement which is expected to be a big part of the business. Perhaps not completely replacing the renovation projects, the remodeling projects, the expansion projects that all of us did during COVID. But this will be a material contribution to comps and earnings over the next 2 years. And my thesis is that this coming R&R boom, which is centered on the aging U.S. housing stock. I recently read a very well written research from Jeffries that discussed the age of the U.S. housing stock in their estimate, which is in line with what you could see from other sources like home builders and other industry sources, that in 2024 and 2025, about 88% of the U.S. housing stock will be older than 20 years. And there's plenty of evidence from history that tells us that after a house turns 10 and older, 10 years and older, there is a greater need for repair and replacement. And with 88% of the U.S. housing stock hitting 20 years and older next year, there will be a material uptick and increase in this spending, this non-discretionary spending, this must-to-do spending by homeowners. And Home Depot and Lowe's will both be big beneficiaries of that. And that revisions trend that I showed you earlier, this does not reflect this coming R&R inflection. So it's obviously something that's a long term. That you have to wait 12 plus months for this thesis to play out. But while you wait for this thesis to play out, you enjoy a very attractive dividend that currently yields about 2.5–3%, and has a history of growing at double-digit rates, 1, 3, and 5-year history, and that trend we can safely assume will continue in the coming years too. So this is not a tactical trading buy, but rather a long-term investing idea that plays on the housing. With that, I'll pass it on to Brian.
Thank you, Shiraz. My top stock this week is in a related industry. The company manufactures and sells paints, coating, and related products to industrial, commercial, and retail customers. There's a good chance you may have visited one of their stores in the past. I'm talking about established paint distributor Sherwin Williams, ticker symbol SHW, which currently ranks as a Zacks rank #1 strong buy. In addition to paints and coatings, Sherwin Williams provides wood finish products, preservatives, corrosive inhibitors, aerosols, as well as caulks and adhesives. The company serves retailers, dealers, and other third-party distributors through its branches and direct sales staff, as well as through outside sales representatives. Sherwin-Williams has operations primarily in North and South America, the Caribbean, Europe, Asia, and Australia. So that's a bit about the company's background and services. Let's shift gears a bit and take a look at Sherwin-Williams Industry Group. Digging a bit deeper, SHW is part of the Zacks paint and related products industry, which currently ranks in the top 2% out of approximately 250 industries. Because it is ranked in the top half of all Zacks ranked industries, we expect this group to outperform over the next 3 to 6 months. And this industry has begun to outperform the market over the last 3 months, as we can see here, with a nearly 20% return. Quantitative research studies suggest that about half of a stock's future price appreciation is due to its industry grouping. In fact, the top 50% of Zacks ranked industries outperforms the bottom 50% by a factor of more than 2 to 1. By targeting stocks contained within leading industry groups, we can dramatically improve our odds of success. And moving to our snapshot page here, we can see that Sherwin Williams is a Zacks ranked #1 strong buy stock, and the company is ranked favorably by our Zacks style score categories with the highest possible A rating in our momentum style score, as well as a B for our growth style score, indicating further upside is likely based on promising sales and earnings growth as well as powerful momentum. Just last week, the paint giant recorded second quarter earnings of $3.29 a share, a 21.4% surprise over the $2.71 share consensus estimate. SHW has delivered a 10.96% average earnings surprise over the last 4 quarters. So they've been consistently beating earnings estimates, and the stock price is reflecting this. Analysts covering the company are in agreement in terms of revisions and have been raising estimates across the board. The full year EPS estimate has been increased by 9.89% in the past 60 days. The 2023 Zacks consensus EPS estimate now stands at $9.56 a share, reflecting potential growth of 9.5% relative to last year. It's exactly the type of trend we want to look for when narrowing down our list of potential stocks. And I want to mention one more thing here. This rally has really broadened out over the past 2 months. Early in the year, all we heard about in the financial media was that big tech was responsible for the rally. But now other sectors and industry groups have come to the forefront. SHW, for instance, has recently broke out and is hitting a series of 52-week highs. So targeting stocks that are less extended than some of the bigger tech names is a good way to go here. So Sherwin Williams, ticker symbol SHW, is my top stock pick this week. It's obvious the growth is there for this company and looks set to continue into the future. Make sure you subscribe to get all of our top stock picks. We bring them to you here each and every week on Zacks.com. From Shiraz and I and everyone here at Zacks, thank you for watching. Tune in next week for more of our top stock picks.